It could be out of interest or just burning passion. Everyone joins into stock market investing for a reason. The stock market is an excellent opportunity for anyone to get wealthier quickly. It also comes with the perk of being your boss. You wouldn't be obligated to follow a set of pretty formed rules or even accountable to anyone but you. Plenty of people are making big money out of the stock market right now. Is it possible to do so? Or is it just a rumor that runs around? In today's scoop, let's find it, right? So here is a glimpse of 10 of the wealthiest stock market investors. Number 10. John Arnold. Fee ideas are in themselves practical. It is for want of imagination in applying them that they fail. The creative process does not end with an idea, it only starts with an idea. In 2012, at 38, John Arnold stunned the hedge fund industry by announcing that he would no longer handle other people's money. Arnold was a successful energy trader who formerly worked for Enron, earning the disgraced firm $750 million the year it went bankrupt. Centaurus Advisors, Arnold's hedge firm, sprang from its ashes. Arnold has recently invested in solar farms and deepwater oil ventures in the Gulf of Mexico. Number 9. Julian Robertson. Our mandate is to find the 200 best companies in the world and invest in them, and find the 200 worst companies in the world and go short on them. If the 200 best don't do better than the 200 worst, you should probably be in another business. Julian Robertson was a well-known hedge fund manager throughout the 1980s and 1990s. Globally, Robertson used a long-short strategy to profit from the performance disparity between his best and weakest stock picks. Tiger Management, Robertson's business, collapsed in 2000 due to poor performance. However, several of his protégés who worked for the fund have become successful hedge fund managers in their own right. Number 8. Stanley Druckenmiller. The key to money management. It's making much money when you're right and minimizing it when you're wrong. Stanley Druckenmiller, a legend in the financial world. To date, he hasn't achieved the same mainstream name recognition as investment wizards Warren Buffett or George Soros, but that has nothing to do with the outcomes he draws. The fact is, by some measures, he has even exceeded his more famous peers by consistently delivering returns through the use of varied unconventional investment strategies. He is a trader with a top-down approach. It combines long and short positions in all types of assets, including stocks, bonds, currencies, futures, etc., based on the investor's expectations for macroeconomic changes in market conditions within the specific period. Number 7. Bruce Kovner. Fundamentalists who say they will not pay attention to charts are like a doctor who says he won't take a patient's temperature. What comes ahead can be mind-blowing for anyone. Kovner is a cab driver to one of the best traders in the world today. Bruce graduated from Harvard while driving a cab. Yes, you heard it right. He is known to be a macro trader and also one of the wealthiest traders. A trading strategy focused on commodities and currencies. Number 6. Paul Tudor Jones. The secret of success from a trading perspective is an unwavering and unquenchable thirst for information and knowledge. One of the most successful and richest traders, Paul Tudor Jones, started his firm at T6, shocking right? And it was after he began to trade cotton in the commodity pits. Nevertheless, Paul produced 28 straight full years of all wins. Paul looks at himself more like a trader than an investor, though. As a successful macro trader, he studies the impact of world events, the flow of money around the world, mass psychology, and the analysis of technical and fundamental assets. So far, one of his best predictions is the black money stock market prediction. When everyone saw the market go down, he made a 60% profit. Number 5. Steve Cohen. The way I understand the rules on trading on inside information is very vague. Stephen Cohen is an American investor and hedge fund manager. He is also the founder and CEO of Point72 Asset Management, a family office in Stamford, Connecticut. He is an investor who is called a professional in short-term transactions. As for trading moves of Cohen, it can be easily described as the complete opposite of Warren Buffett's. Buffett is someone who prefers to invest in the years to come. But Cohen was always an adherent of short-term trading. As was mentioned by his colleagues, he sometimes managed to enter up to 300 transactions per day, not delving into any financial details. ITO's Elect, an undervalued or overvalued asset, developed a unique program that did most of the routine work for him. Number 4. George Soros. I'm not better than the next trader, just quicker at admitting my mistakes and moving on to the next opportunity. George Soros is an epic hedge fund manager, and he is widely considered to be one of the most successful investors. For example, he managed the Quantum Fund, which achieved an average annual return of 30% from 1970 to 2000. Soros is one of a kind among highly successful investors in admitting that instinct plays a significant role in his investment significant decisions. Moreover, he is famously well informed about regional and global economic trends and uses this knowledge to exploit market inefficiencies with extensive and highly leveraged bets. Number 3. Jim Simons. There is no natural substitute for common sense, except for good luck, which is a good substitute for everything. James Harris Simons, or Jim Simons, is known to be the quant king and one of the greatest investors of all time, as you can see. After having started one of the most successful quant funds in the world, Renaissance Technologies or Rentech. He founded Rentech in 1982 at just 44 years old. He was the chair and CEO until 2010 and remained a non-executive chair. He is an investor who mastered mathematics. Despite already having a successful career as a prize-winning mathematician and a master code breaker for the IDA, he also decided to pursue a career in finance. In 1978, the mathematician started the hedge fund Monometrics, which was the predecessor to the highly successful Renaissance Technologies or Rentech. He did not think to apply math to his hedge fund at first. But, over time, he realized he could use mathematical and statistical models to interpret data by looking for non-specific moves in financial data to predict future returns and profits. Number 2. Carl Icahn. I'm no Robin Hood, I enjoy making money. Icahn is an American businessman. He started his career as a stockbroker on Wall Street. Icahn calls himself a contrarian investor. He also said that his investment philosophy, generally, with exceptions, is to buy something when no one exactly wants it. He looks to invest in companies where share prices reflect poor price to earnings, P/E, ratios. He hunts for corporations with stocks with book values exceeding their current market values. After which, he aggressively invests in a significant portion of equities in these corporations. It also makes him the largest shareholder of those companies. Eventually, he calls a general meeting to hold elections to form a new board of directors or passes the resolution for initiating divestiture of assets to deliver more excellent value to shareholders. Number 1. Warren Buffett. If you don't find a way to make money while you sleep, you will have to work until you die. Buffett, the second of 3 children, whose father was a stockbroker. For Warren Buffett, making money was a very early interest. He sold soft drinks and made a paper route in the early stages. At 14, he invested the money he earned from this on estate land and rented it out for profit. He never wanted to go to college, but he also took that step from his father's will. From there, he got into Columbia and even learned some new skills to develop investment theories. Finally, Buffett wanted to look beyond the numbers and focus on a company's management team and its product's competitive advantage in the market. By 30, he was already a millionaire. His investment philosophy became one based on the principle of acquiring stock in what he believes are well-managed and undervalued companies. Moreover, he intends to hold the securities indefinitely when he makes these purchases. So today, everyone who got their heart into investing also has a place for Warren Buffett. Conclusion. These investors bring hope to newer investors to the market. Moreover, they ensure that the stock market can be one of the best places to escalate profits and wealth quickly with just the right strategies. These investors are the richest across the globe, and this can change as newer means come kicking in, but the point here is they stand stable at being remarkable stock market investors. If you like the today's scoop, please like it, share it with your friends and subscribe the channel for latest top stories.